How much are they leaning on public bond markets or indeed the rest of the debt system?
So the best way to think about this is they are tapping all debt markets. So we have obviously the typical on-balance sheet corporate borrowing, which you see like with the Oracle deal today. That can be an investment grade bond, a high yield bond, or a leveraged loan, or even a private credit direct loan. But there's a lot of off-balance sheet borrowing happening as well. I know that sounds a little bit scary when you first hear the words off-balance sheet, but what it simply means is that instead of an investor lending to the company, they're lending to the actual data center project itself. So they create a special purpose vehicle that is the actual builder and owner and borrower to create the data center. When you tap that, that opens up a whole other realm of markets. So for example, the bank project finance construction loan market has been heavily involved in this space. You're seeing private placements, which are typically insurance companies. You're seeing structured finance investors in the form of commercial mortgage-backed securities and asset-backed securities. You're seeing private credit. You're seeing GPU finance for the chips. It is touching all parts of the debt markets.
And we think about, well, CoreWeave was very much thinking about financing of the chips to begin with. We saw that deal between Blue Owl and Meta was a real pin-up in the private part of their business. What are they having to pay for all of this, Paula?
It really depends, and it can range from just a little bit over investment grade all the way to double-digit teens, mid-teens yields. It just kind of depends on the structure. There's also a big difference between something that is a hyperscaler borrowing or ultimately backed by a hyperscaler versus some of the more risky things where maybe it's a small early-stage company that needs to borrow money that's all in on AI.
We've had a lot of new neoclouds popping up, for example. Just tell us about the need for transparency, though. What's so interesting is the equity market's response to Oracle today is just phew, you're telling us a little bit more. When we have so much private credit getting involved, do investors feel they have enough information about just how broadly the borrowing is going from certain issuers?
I think it depends on the issuer. So Oracle, for example, while it is doing this off-balance sheet borrowing, it is still tied to those data centers through lease commitments, and that does show up publicly in their financial statements. But I think for a lot of these deals, it's actually pretty much all private. It's also a lot of times private companies doing it. So then the investor base is just a very different investor base, and I hope they're getting disclosures, but it's unclear. And I think what makes it nerve-wracking for the markets is even if those private company investors are learning about it, maybe the rest of the market doesn't know. And that can just cause unease and uncertainty around the absolute scale of the debt being borrowed right now.